Thing number three, we're moving to Target, ticker TGT, and watch sales disagree on the economy. So we got Target paired up with, I'm assuming we're talking more luxury
Yeah.
watch sales and that market.
Yeah. Well, Rob, one of the debates I've been having with people on Twitter, and these are smart people, they're great strategists, they're great macro analysts. But one of the debates that I've been having is they're saying the economy is in great shape.
Hmm.
And they're looking at aggregate data. They're looking at the CPI coming down. And my response is, okay, fair enough, but it's not low, and I don't believe the CPI. I think it's a lie. And they say, well, GDP growth is really strong. And my response to that is, okay, yeah, it is, but the government is spending $2 trillion a year more than it's taking in, and government stimulus, whether it creates value or not, adds to GDP. So, like, do we really have a strong economy, or is the government buying the answer they want? And then, they'll further say, well, unemployment is really low and the jobs numbers are great. And my response to that is the jobs numbers are lies. And the jobs that we're seeing, there's been no growth in full-time employment in years. All of the job growth is going to people who weren't born in the United States, and it's all part-time job growth. So you don't have more employment. You have the same people working more jobs to make ends meet. And so these really smart strategists are saying the economy's in great shape. And my response is no, it's not. We have a bifurcated economy, right? If you're wealthy, you're well positioned for inflation. If you're working with the government or for the government, you're in terrific shape. But most of the country, I think, isn't doing so great right now. I think people are living paycheck to paycheck. They're suffering from inflation. They don't believe that food prices are up only 1%. Their grocery bills are killing them. Their fuel bills are high. Rent hasn't come down, and I'll admit, I've been wrong on the direction of real estate prices. When interest rates went up, I thought housing, shelter, those prices were going to come down. Now they have, and we've talked about why, and that's fine. But I thought that would happen. Um, but my view is we have a bifurcated economy. You have a small number of people doing really well, pulling up the averages, and a large number of people that are struggling. And so that's what we're seeing with Target. Target, which it's generally the less affluent people or the middle class that'll be shopping there. Their latest earnings report showed declines in food sales, discretionary sales. Customer traffic was down almost 2% in the quarter. It was not a good quarter. And our view is that is largely because of inflation. People are struggling. When you need to take on 2 and 3 part-time jobs to make ends meet, go tell those people the economy's in great shape.
Yeah, you note, Gary, that watch sales tend to indicate a strong economy, right? But that doesn't appear to be the case, at least from your position. We had Benny Moore on of Vasco Assets a couple
Yeah.
weeks ago as well, and I remember him talking. And I know with working with him, right, watches have been a big keen focus of theirs from an alternative investment standpoint. So why do you think that is? And is this a market, when you talk about watch sales being up almost double, one report, UK-based Watches of Switzerland reporting, what's causing that dynamic?
So that's exactly what we're talking about. And some of these watches might go for $50,000, $100,000, $250,000, right? I mean, do you want to buy a watch or do you want to buy a Ferrari, right? Do you want to buy a watch or do you want to put a down payment down on a house? Obviously, the people buying these luxury watches can afford that. They can afford to take the price of a high-end car or a down payment for a house, or in some cases, the price of a house. Um, and use that to buy watches. And, the answer is inflation is very kind to people who own assets and have the credit score that enables them um, to take on debt that becomes worth less. And so, just as one personal example, because, at Deep Knowledge Investing, we saw the interest rate issues coming, we saw inflation coming, we knew the Fed was going to raise rates. I refinanced my mortgage in the fourth quarter of 2021. And I was able to lock in a rate just over 3%. And that's a 30-year fixed rate mortgage. So for 30 years, I'm going to be paying the same amount. Now try to imagine. So I did this, roughly 3 years ago, Rob. 27 years from now, when I'm writing the exact same mortgage check for the same amount, what do you think the dollars represented by that check are going to buy?
Not
Very
much.
little, right? Very little. So what happens is when you have a lot of inflation, the value in dollars of hard assets will go up, right? So the value of property goes up, but your debt is denominated in dollars. And
Right.
so I get to own a house that will be worth more in a high inflation environment. The dollar price of it will go up if I ever go sell it. But the debt that I have against it, my mortgage, is also denominated in dollars that are depreciating. When you have enough money to do things like that, you can make a really bad system work for you. If you're not spending all of your money at dealing with rent, food, fuel, basically the cost, just the cost of living, you can do things like buy Bitcoin, buy gold, buy stocks. Those are things that do really well in an inflationary environment, but you have to have excess assets and excess income to take advantage of it. And so again, this is why I think we have a bifurcated economy. And I want to point something out. A lot of people will criticize me for saying that I'm cheering for this. I am not cheering for this. I think what we have is unfair. It's wrong. It's harmful. But my responsibility as the head of deep knowledge investing is to work with people and protect them from this. I'm not cheering for this. I didn't make it happen. I don't want things to work this way. But for our clients, for our subscribers, it's our job to find ways to make all of this work for them. And that's what we do. If I were designing the system, I would design it differently. We'd have hard currency, we'd have no inflation. And I think that would get us a better, more fair, long-term outcome for the country. I can't control that. So please don't think I'm cheering against people, that I'm against anyone, that I want people to suffer. I don't. I think the system we have right now is bad. It's wrong, but it's my job to figure out how do we make it work for our people, for our clients. And I'll also point out that doing things like buying gold or buying Bitcoin or buying stocks doesn't harm anybody. We're not taking money away from anybody. We're simply going up against other people with assets and making better asset allocation decisions than they are.
In office, out of office,
We're in
good
office.
market, bad market. We're in the game no matter what. So